More than 1 billion in crypto positions were forced liquidated in the worst single day decline since the FTX implosion. So today we will dive into the factors behind this crypto bloodbath. So keep watching to find out what this means for your holdings and next moves. So the 1 million that got liquidated, it happened because people use leverage. They over excessive leverage. So what does leverage mean? Well, if you're new to cryptos or trading in general, or even if you need a reminder, leverage is when you borrow money from the broker, essentially. You borrow money, you can do 100x leverage. So if you have 1,000, you can trade with 100x that amount. That is not the right way to use a leverage. So now I want to give you a couple of tips on why this is useless to work leverage and how you can avoid losing. I mean, people lost $1 billion. Can you imagine? Well, there's a couple of reminders I'm going to give to you. But first, before that, why would the market go down that much? Why would the market go down when there's so many positive news in crypto? Why would it go down if we just have a look here at Bitcoin as an example? So BTC USD. If we have a look at Bitcoin, you will see that at the 17th of August, it fell down over 7%. That was on the back of this day. The reason for that is the bigger term picture, the long-term picture of a Bitcoin or cryptos or any asset is driven by the market fundamentals. So what's happening in the market and all that. But in the shorter term, it's driven by speculation, fear and greed, people jumping in and out based on emotions. So really what you and me, the actions you and me are taking, and the bigger players as well. So the lessons that I've learned from this over the years is that number one, don't use leverage, especially not if you have a strategy for leverage. So don't use it because it's not needed in cryptos. Number two, look at the bigger term. So let me just zoom out a little bit and you can see that the market is clearly making higher highs and higher lows. And now if we just take a little look back here, we could see that the market fell down 22%. It fell down 20%, and now it's down roughly 18%. So there's no reason to panic, no reason to think, oh, the world is ending. No. So the tip here is, this is a marathon, it's not a sprint. So there's no need for you to really rush this. Because looking at the bigger pictures, so there's so many positive news here. Number one, the SEC, they set a green light for Ethereum-backed futures. And that's an ETF as well, an exchange-traded fund. In a win, this is a big win for the crypto industry. Because what this means is that now the bigger players like institutions can finally get into cryptos as well. And it's no other than Coinbase that actually got this approval. And you might be asking, what does it mean for me, Dennis? I'm going to get to that in a moment, don't you worry. So basically what this means is that now the bigger players can get even more involved, and hopefully this is going to be the starting point for all the other ETFs that are looking to be approved as well. So if now bigger people enter the market, that should drive the price higher, at least in the medium to longer term. So looking at the SEC, they are putting a green light on the ETF for Ethereum-backed futures. Now, what does this mean for you? Well, Ethereum is a great position or opportunity to be investing in because of these news, because that's going to allow the bigger players to get involved in that. We thought Coinbase, right? They were in the hot water with the SEC, but now they're regulated in the US and they got this approved as well, which should mean that they're doing something right. So Coinbase is also a good opportunity to invest in, we believe. So that's the so what for you, and we believe there's going to be great growth in the market over time. So instead of you using over excessive leverage, it could be wise to use a strategy that will make you a lot of money over time, but takes the emotions out of the game, like the dollar cost averaging strategy on steroid, the price cost averaging strategy with the PCA, as we call it. And you can download that below, by the way. Press the link below and you can actually go and find out for yourself how to utilize that strategy and get started. So what are we doing with this information this week? Well, we're definitely going to enter into Ethereum. It's around 1664 currently, and it's down more than, as per the strategy, 20% from its high. So we're using the PCA calculator for this. So make sure you download your own version. Just press the link below so you can get your version as well and learn how to use it. So we're investing $500 or pounds, depending on where you are in the world. And we're aiming to we waited for a 20% drop before investing. And then we're aiming for 9% profit target before we take any profit or move our stop loss. So all you need to do after you've chosen the asset, and we think this is a good one, do your own research. But then we go into eToro, and then we go into, you're searching at the top bar there as we've done on every episode. We then go in here and you press open trade. When you do that, you put in $500, and when you do that, you're then going to be in the position, and now we've invested $500 in this as well. And we believe, right? So we believe the bull market is just around the corner. And as you know, and as we've told you, we are seeing in less than a year the halving taking place also. And the halving is where they cut the amount of Bitcoin coming out in circulation in half, and usually triggered an insane bull run in cryptocurrencies. And the starting point has been 1 year before, and this is happening in April, May next year. So I'll let you do the math. We're less than 1 year for that. So it's time to position yourself for that, we believe, and the time to start doing your own research as well.